Hey everyone, welcome to the InvestIQ podcast. Before we dive in, for those of you tuning in for the first time, let me quickly introduce what this podcast is all about. Here, I primarily share two main topics: personal finance management skills, and second, life experiences I've gathered along the way. So, let's jump right into today's episode. To kick things off, I'll take a few minutes to give you a quick overview of my background, especially focusing on my time living and working in Australia. As I've mentioned before, I've been working since the early 2000s, so it's been nearly 25 years now. Throughout that time, I've done everything from assembling computers to working as a programmer, then transitioning into product management, and eventually moving into the world of investing. Even though I've worked in a variety of roles and industries, the core theme of my career has always been the technology industry, or simply tech. More specifically, when I moved to Australia, I ended up specializing in a niche within tech, financial technology, or as you might hear it, fintech. Over the years, living and working in Australia, I've had the chance to work with some of the biggest financial organizations there, like Commonwealth Bank, Westpac, and NAB, as well as fintech companies that focus on building tech for the financial sector. I've also had the opportunity to advise the Australian government, not just on technology or finance, but also on policies and management at a macro level. Now, why am I sharing all of this with you? Well, I want you to feel confident that when I'm speaking on these topics, it's not just theory or random information. I've got the professional background and expertise to back it up. This knowledge comes from my career journey, not from random snippets here and there. Everything I share in this series is based on solid, real-world experience. So, with that said, let's get started on today's topic. If you've been keeping up with the news lately, you've probably heard a lot about cryptocurrencies making a huge comeback. Bitcoin, in particular, has broken its 2023 peak and is now trading above $100,000 per coin. And just like every time there's a spike, you hear all sorts of experts coming out of the woodwork saying things like, "Bitcoin is the future of currency. It'll be a store of value that replaces gold. Bitcoin is a golden opportunity that could change your life." Well, here's the thing. Because of my line of work, I was fortunate enough to be exposed to these technologies pretty early on. As I mentioned earlier, during my time in Australia, I got the chance to work with fintech companies, and we were already exploring blockchain technology back in 2010 to 2011. That's nearly 15 years ago now. Because of that early exposure, I've witnessed many of the boom and bust cycles of digital currencies. Now, let's be clear, I'm not denying that some people have made a fortune from it. There are plenty of stories of people getting rich off cryptocurrencies. But, at the same time, there are countless others who've lost everything, as many were sucked into risky investments during the hype. Just like with stock markets or any other type of investment, when the market is hot, there's always going to be a lot of noise. People will hype it up, and unfortunately, a lot of the time, there are scams preying on people's desire to get rich quick. That's exactly why I wanted to create this episode, to give you a different perspective. The goal is to provide multiple viewpoints, so when the time comes for you to invest, you're making decisions based on solid knowledge rather than hype or wishful thinking. If you've been following this podcast from the beginning, you'll recall that in an earlier episode, I shared my own journey into the world of blockchain technology. I explained how I first got involved, and also why I ultimately decided to take a step back. Instead of diving into cryptocurrency investments, I chose to focus on studying the core technologies and analyzing investor behavior in this space. I didn't treat it as an investment tool, I treated it as a subject of study. So why did I decide to step away from investing in cryptocurrencies? A lot of people might say, "Hey, if you were involved when Bitcoin was worth just $10 or $20, you could have bought in big and be a millionaire by now." But this kind of thinking is exactly why so many people fall into dangerous traps. It's too easy to think about the what-ifs, like, "If I had only invested back then," or, "It's going up, so it's sure to keep rising." The problem with this kind of mindset is that it's just blind speculation. It's basically gambling. You're looking at charts and just hoping for the best. And that's not investing. Investing is when you take the time to truly understand something before you put your money into it. For example, when you invest in a company, you don't just look at a stock chart. You analyze the company's financial health, you understand their cash flow, you check out their competitive advantages, and you research the leadership team. All of these factors give you a much clearer picture of whether or not this company will continue to grow in the future. Once you've done that deep dive, the luck factor in investing becomes much smaller. Sure, there's always some risk, but if you've done your research, you'll be able to make decisions based on facts, not just gut feelings. When you invest with clear information, you're confident, no matter what the market does. That is true investing. And that's the approach I want to help you take through this podcast. Unfortunately, this isn't what's happening in the cryptocurrency market. Some people argue about calling it crypto or digital currency. But honestly, I've stopped calling it crypto. It's time to call it for what it is: virtual money. In the first episode of this series, I'll break down what blockchain technology is and how these digital currencies work. And in future episodes, I'll dive into both the pros and issues of these technologies and digital currencies. Now, let's imagine the early days of currency exchange. Each person holds a certain amount of money. For example, I have a wallet with $100, and I have a friend named John who also has a wallet with $100. When I need to buy a chicken from him for $20, I would give him $20 from my wallet. At that point, John's wallet would have $120, and mine would have $80. These are the types of transactions, or exchanges, we are talking about. Now let's introduce a third person. Let's say his name is David. David will act as the bank in this scenario. John and I will both hand over our money to David for safekeeping. When I need to buy the chicken from John for $20, I'll ask David to note the transaction, moving $20 from my wallet to John's. This way, all of our transactions will be recorded in a ledger kept by David. When John or I need to withdraw our money, David will give us the correct amount based on the records. Essentially, David, in this case, functions as the bank. In real life, banks operate in much the same way. They keep records of transactions, but the process is digitized and managed by computers. Now, let's talk about the emergence of blockchain, Bitcoin, and cryptocurrencies. These technologies came about as a response to a critical problem. People don't trust centralized banking systems. No matter how reputable the bank is, the fact remains that all our transactions and money are controlled and managed by one institution, the bank. Because our money and assets are essentially just numbers on a ledger in a centralized system, people became concerned about the risks involved. There are potential threats like hackers breaking in to alter these records, or even simple operational errors that could lead to financial losses. This concern led to the development of a new system. Let's return to our example of buying a chicken. Instead of giving my money to David, who represents the bank, to hold and record the transaction, imagine now that everyone in the village has a copy of the ledger. So, when John gives me the chicken, both John and I would announce the transaction to everyone in the village. All of us would then update our ledgers with this information. John's balance goes up by $20, making it $120, and mine goes down by $20, leaving me with $80. That's the basic concept of blockchain. Instead of a single person, David, holding all the records, now everyone in the village shares a copy. If there's an error, say, one person, like Mark, writes that I only paid $10 instead of $20, then immediately, everyone else's ledgers will show the discrepancy. Since 99 people have the correct record, Mark's will be corrected automatically. This is the decentralized nature of blockchain. If we were to do this manually, it would be impossible, especially if we were talking about a system that spans the entire globe. But thanks to modern technology, with powerful computers and the internet, this process becomes feasible. This is the essence of blockchain technology. Now, it's important to note that blockchain isn't just for cryptocurrencies. It's a foundational technology that can be used for many other applications. For example, instead of using it just for money, you could use blockchain to verify property transactions. After someone exchanges money for a property, the ownership rights would be transferred to the new owner, and instead of the government keeping the records on centralized servers, they could use blockchain to manage these transactions. Similarly, blockchain could be used for things like vehicle registration or even voting in elections. There are many different ways blockchain can be applied, and Bitcoin is one of the first and most popular uses of this technology, originally designed as a digital alternative to traditional currency. Now, let's imagine we live in a world where there's no more cash. Everyone holds Bitcoin, the rich hold a lot, and the poor hold less, just like that. Whenever a transaction happens, the details of that transaction are updated across all the records, which, in technical terms, are called ledgers. These ledgers are stored on countless computers around the world, all running on that decentralized model I explained earlier. The person who created Bitcoin also set rules around how things should work. For example, the total supply of Bitcoin is limited. There are rules for how Bitcoin can be transferred from one person to another, how transactions are processed, and how mining, the process of creating new Bitcoin, fits into this ecosystem. In short, Bitcoin operates on a set of rules that are pretty interesting, and the ultimate goal is to eventually replace traditional forms of currency. That's the vision behind Bitcoin, a pretty ambitious, exciting idea. But when you actually apply this in real-world situations, it's not all smooth sailing. While Bitcoin has some great advantages, there are also challenges that come with it. And that's just Bitcoin we're talking about. Beyond Bitcoin, we have other cryptocurrencies that also use blockchain technology, like Ethereum, and a whole bunch of altcoins. Each of these coins is built with different features, goals, and ways of functioning. Some are designed to be faster, some are more secure, some are built for specific industries like finance or gaming. So while the future of digital currencies looks really promising, it's clear that there's still a lot of work to do. There are different approaches, different projects, and with all the new technology comes new challenges. But one thing's for sure, the blockchain revolution is far from over, and it's changing the way we think about money, transactions, and the financial system as a whole. At this point, I hope you now have a basic understanding of the differences between blockchain and Bitcoin, or any other cryptocurrencies. For me, even many years ago, when I started exploring and working with these technologies, I was personally fascinated by blockchain. To this day, I'm still a huge fan of blockchain technology. However, I keep a very clear distinction between the technology itself and the products built around cryptocurrencies. When it comes to blockchain technology, I remain excited about its potential, and I continue to research it because I truly believe it will have applications across a wide range of industries in the future. But as for the cryptocurrencies, I've decided long ago that I will stay out of the investment side of things. I've always believed that any investment should be based on knowledge. When you have a solid understanding, you can make informed decisions for yourself, instead of blindly following advice from anyone, even me. So rather than just telling you, don't invest, or invest in this, the best approach is for you to equip yourself with the knowledge. Understand the essence of these technologies and how they actually operate. With this knowledge, you'll be able to decide for yourself whether it's a smart investment or not. And that's really the goal of this podcast series. I want to help you understand the technologies behind cryptocurrencies, provide you with my personal perspective on them, and share the decisions I've made for myself. By doing this, I hope you'll have enough information and perspectives to form your own conclusions. I also encourage you to gather other viewpoints as well. Once you've explored enough perspectives, you'll be able to make your own decisions confidently. Initially, I had planned to share all of my thoughts and analysis in a single episode, but after writing it all out and sitting down to record, I realized it would be too long. So, I've decided to break this series up into several episodes. In this first episode, I'm introducing blockchain technology and explaining how Bitcoin and other cryptocurrencies work. In the next episode, I'll dive into the pros and cons of Bitcoin and explain why. After analyzing everything, I decided to focus solely on researching the technology itself and just observing the investment behavior of others. To this day, I've never regretted that decision. I hope this series will help you gain a better understanding of these topics so that you can arm yourself with the knowledge before diving into the cryptocurrency investment wave, which I believe will become much more intense in the near future. I'll stop here for today's episode. If you found the content useful, please share it with your friends and family. Also, as usual, since YouTube's algorithm favors videos with more likes, it would really help if you could hit the like button if you enjoyed this video. It helps get the podcast out to more people. You can also consider subscribing to the channel so that YouTube can notify you whenever I post new content. Thanks so much for tuning in, and I hope you have a peaceful evening.